Hello, everyone, and welcome back to another exciting episode of the Big Data Show. I'm your host, Nate Latimer. On this show, we talk about all things futuristic, AI, technology, big data, and today's guest, we have Mr. Oscar Jofre, who is the founder, president of Kore, one of the top companies in the private equity game. So very excited to have you here today. Oscar, thank you so much for traveling to be here, and welcome to the show.
It's great to be in the nice, warm Orlando. Thank you.
Yeah, it's not hot here at all, huh?
No, not at all. Not at all.
They say you get acclimated, but you don't. You don't. It's just hot and sweaty and humid. It's like a sauna every time you walk outside.
Every time.
But very happy to have you here. Guys, so, I mean, this guy's like top 10 when it comes to equity crowdfunding, top 5 fintech influencer, top 10 in blockchain, top 50 in insurtech. So, tell us about yourself. What makes Oscar cool? What's your background? How'd you get started in all of this?
Wow. That's do we have lots of time? Because it's look, my journey as an entrepreneur, like everybody else, you start with a venture, and as each venture matures or exits, you don't end. Your maturity, you learn something and you carry it on. And I just happened to be at the right place at the right time about 12 years ago, meeting a man that kind of changed my entire life, right? My perspective, I should say, in what was happening with raising capital for private companies. I've been in the public markets at that time, and here I stumbled. And in fact, the irony, I stumbled to him here in Orlando. I mean, I still tell people it was, I can't explain it to you. Just I heard the word democratization. Don't ask me why I decided to peek in, and there's David Weil talking about democratizing the private capital markets. And
who is David Weil?
So he is considered the father of the Jobs Act. Not considered. He has been coined that. He is the very person who wrote the regulations that President Barack Obama on April the 5th, 2012, and forever changed the financial private capital markets for all of us.
It absolutely did.
Yes, it did. And it changed everything for me. So from that point on, I knew that we were on a journey. And part of that journey, I had to write because we had to educate. I mean, here's a whole new sector about to emerge, and nobody knew anything about it. We knew about private markets, but think about it this way. It's sort of like, there's an ocean, but the only part is Cayman Islands. Why? Because that's the only place the 1%ers go. And that's the only thing you hear about. But that only represents 1.5% of all the ocean. And the rest of it to humans will be, you're out in the dark. You don't know. You know it's there. And
it's unfamiliar, uncharted territory. And, whenever something like that is groundbreaking and changes up the game completely. So, educate the viewers on what happened whenever the Jobs Act of 2012 was passed and, allowed for solicitation of certain offering structures. So, let's go through that a bit.
That's interesting because on April the 5th, 2012, everybody listening in here, you should know that you had no legal right to solicit investors. That's number one, publicly solicit. Number two, if you were of age, which is 18 years of age, you weren't even allowed to invest. The only thing you could invest, go to your bank, give them your money, and they'll put your money in a mutual fund at whatever percentage, and that mutual fund gets to invest in private companies, make all the money. So it was transformative in two different ways. That democratization of allowing that ability to raise capital through general solicitation. So what does that mean? Well, you can put up a billboard. You can be on a TV show. You can publicly say, ladies and gentlemen, I am here today raising $75 million using Regulation A+, which I'm not, but I'm giving you an example, and fully compliant, and say I'm at www.mycompanyname.com, and boom. You're not, you can do that. We're not done yet. Now, anybody can come to your website, enter their information, enter their credit card details. That's right, credit card, or their ACH, and make an investment, let's say $50. Unbelievable. That changed everything. And so now that's a different behavior. You do know that. So even though President Obama on April 5th signed it in, it did take another 3 years to actually an actual regulation to formulate to be able to be utilized. But even all that time, during those 3-year period, the ridicule that I got, I mean, in Silicon Valley and different locations, Oscar, this thing is going to be full of fraud. And at that time, I didn't have any evidence to refute those comments. Today, I'm so proud that, I can compare RaiseX, which stole billions of people, Forest, which another 10 billion where the trees went missing, and I can go on and go on. Welcome to the Jobs Act. Nothing even close to that. In fact, it's quite the opposite. It's more transparent. Companies need to file. There's information available there. Now, I didn't say it's perfect, but it's far better than it ever was.
Yeah, no, absolutely. I mean, and it's funny because that's really how, my company Nvatomate, stumbled into that market because, we license over 4,000 different source URLs, as consumers behave online, buy products, subscribe to services, book trips. Like some of those are even investment related sites. So we'll flag them as like a known investor. So we ingest all this information, but it's there, but it's not anything we were really, monetizing on or capitalizing on until all of a sudden, Jobs Act 2012, people started just knocking on my door and saying like, hey, how many investors do you have that have this income or logic, this net worth, and, their lifestyle, behavioral like attributes. So, they started pinging me for audience data. And, that's when I was just like, I really need to look into the SEC, and make sure that everything's going to be compliant, like the solicitation of the offering structure. So, I sort of stumbled into that as well. So, can you talk a little bit and educate the audience on, Regulation CF for crowdfunding, Reg A Plus, Regulation D, like the offering structures that do allow you to solicit an offering and drive traffic to like, an offering page.
To an offering page, yes. So, look, you asked an important question. When it started with the Jobs Act in 2012, right? That's when it got signed. 2015, 2016 is when the regulations started coming out, so you can utilize them. So the first phase, I just want to explain this to you because it's really important. You could put up a sticker and say, I'm raising money, and wave your hand, and you were successful. Okay? So I want people to understand that in the early days, because it was new.
Exactly.
Right? It was new, right?
Everybody likes a shiny new toy.
That's right. It was a brand new toy. So we went from that, it's all about the video. It's all about the video. It's all about the video, right? So people were spending $15,000, $20,000, amazing videos. And you're right. For 2 years, that went really well. And then it wasn't enough. It wasn't enough. It wasn't enough just to put a video in a website. Now you needed the other part, data. And I'm coming this to you because what you guys are working on and why I think it's so important to understand how we've gotten here in all these different stages and why infrastructure is so critical. Because when it's new, you can do it in any way and
wing it
and be successful. In fact, the very first Reg A, which I'll cover, it was over $1 million just in legal fees. It's
ridiculous.
Ridiculous, right?
Should cost like $25,000
today, right?
Sure.
No
offense, attorneys.
No, not. I don't think they would be. But the point is that over time things have changed. So we went from video. Now data. So everybody who had a data set, hey, come to me, I can make it happen. And people were like spending tons of money and getting no results. So what people tended to forget is that data alone is useless. There's tons of it. It's been there for, 30, 40 years? I mean, they've been using that stuff on television for us for years.
Back since like the Vin Gupta Info USA days.
That's right. So what did it need? It needed data with the additional information that what was missing. We needed to understand behavior. We needed to understand personas. And behavior is not how you scratch your head or anything like that. It's the things that an individual likes, dislikes, what they like to visit, what they like to do, who they know, things not that nature. And I think I know that's where we're heading to. We're finally there with a combination what I call art, which is the video, and science, which is the data. Those are the combinations we're at today. So let's talk about the regulations. Regulation CF, fantastic regulation. It allows a U.S. domicile corporation. U.S. domicile meaning you need to have an office in the United States. Now, and people go, but Oscar, my properties are in Kenya for mining. That's fine. Mining management are here. And you can raise up to $5 million every 12 months.
Yeah, originally it was up to $1 million, and then I think $1.07 million with inflation, and then it jumped to $5 million.
Correct.
A few years ago.
Correct, in March 15, 2021.
Right.
So the regulator saw the success and changed it from $1 million to $5 million, and that changed a lot of things. So number one, up until that point, FINRA broker-dealers had no interest whatsoever in Regulation CF. They're like, nah, I don't bother with that.
Yeah, so I want to ask you a rhetorical question, really. So a lot of people, knowing that they can, under a Reg CF, raise $5 million now instead of $1 million, why are they still choosing to go the $1 million route versus $5 million?
So the regulators didn't want to, again, democratization. They didn't want to put additional burden on companies. They wanted to make it as easy as possible for them to be able to raise capital. So when you raise under $1.7 million, and it's the very first time you're using regulation, you only need a set of financial statements that are less costly for a company.
Fair.
So it's about
Okay.
the financial reporting.
Got it.
So you want to $5 million, you need audited financial statements. And when people go, well, that's an extra burden. Well, get used to it. If you want to raise capital from anyone,
get it together.
Because it's going to happen. So, and again, you've been given an opportunity to raise $5 million every 12 months from the general public. And that public could be anywhere globally. I mean, we're not just seeing Americans participate. We're seeing Canadians, Australians, Brits, everywhere in the world. And every company has an opportunity to engage with that large audience. Now, up until April the 15th, 2021, companies could only raise their capital for Regulation CF under one environment. You had to go to a registered funding platform. And there were pros and cons.
Yeah, like the Start Engines, the WeFunders, the
Correct.
Republic, Seed Invest, there's a ton of them.
Title III funds, Go to Crowd, Fundraise that's coming out
I
now.
think last time I checked, there's 1,400 platforms globally.
Well, in the United States for Reg CF, there's 92. Okay, so they're regulated, but the challenge platforms have is that if they don't have enough investors, well, you know the trap.
That's exactly right. And correct me if I'm wrong, but let's say, as an example, a single platform that can have a lot of offerings on it, they can only, really promote the offering within their existing investor pool. They can't reach outside and promote. That's up to the issuer that's raising
Correct.
capital for them to get that traffic solely to their page. But and nothing against the major platforms, but it is kind of like driving that traffic to a shopping mall. So it's just hey, maybe you want to go to Gap, but oh cool, there's Victoria's Secret, whatever. So you'll get distracted by all the other offerings, which could affect conversion rates. So I'd love to get your take on the platform route versus more of a licensed FINRA broker approved standalone offering page.
Which we call a decentralized funding platform, because they still have to act like a platform, but they don't need to centralize it. So the funding platforms today are going to be driven by a number of challenges, right? So number one, their average investment is extremely low, right? It's below the $500, so which is very different than what happens outside. The average capital raise is still under $500,000 as well. So and part of that is because they've been focused on a very specific, generation of investors, right? But the biggest problem is that any company that has credibility, or it's going to have to spend money on advertising, you have to look at it. I'm going to spend, let's say, $5,000 a month, a small budget, to bring crowd into my offering. I bring 1,000 hits or 1,000 people register to view it. You got nothing. If they didn't invest in your play, the platform doesn't give you the data. That data belongs to them now. You just paid to be in a platform so you can advertise to bring. So I think there is a working model there. What I see now in funding platform, the future is more vertically based platform. So we have a client that's coming out with a gaming. I like that concept. It's very specific. A broker-dealer really couldn't compete with this because it's a gaming community.
Sure.
So it makes sense.
So niche vertical specific platform. So it's like if I want to invest in anything gaming, I go to the gaming platform.
Gaming platform, and it's very specific for a certain size, and it's, I think it meets the requirements that would separate it.
Which also goes back to your point about personas of the investor. It's like,
Yes.
let's find out what their appetite is. Let's find out what they're interested in. And then let's, direct them to an environment to where it's only the types of investments that they would be interested in. Serve it on a silver platter.
Correct. Because the other way, the platforms, it's like Heinz 57, right? They got a flavor for everybody. And as you said, you come in for one and you get diverted to the other. And not only that, once that individual registers, they start marketing to them, right? So, okay, so what is the model that, again, this did not exist prior to March 15, 2021. The broker-dealers opted not to participate under the Jobs Act for Reg CF initially because $1 million. But as soon as they hit 5, well, now you woke them up. Now you're waking up a lot of the broker-dealers who normally do capital raises, and they go, but Oscar, I don't want to do that crowdfunding raise. I like dealing with accredited investors. And I go, yeah, I never said you couldn't target that same audience, but this is crowdfunding. I think what we need to understand is, forget what it's called. Let's look at the regulation. The regulation allows me to raise up to $5 million. Good. It allows me to raise the money from an accredited and non-accredited. Good. Accredited, that's who you want to target? No problemo. They don't need.
And let's explain what accredited is for anybody that doesn't understand.
So an accredited investor in the United States is someone who earns over $200,000 a year, continuously for the last couple of years, got $1 million worth of assets, combination of that. There is also another one called a qualified investor. They got $5 million worth of assets. So if you are that individual, which there's about 7.5 million Americans that qualified, you can invest unlimited.
Yeah, exactly. So, and correct me if I'm wrong, it is or logic, those 200,000 income or $1 million in net worth. And then there's also joint spousal.
Joint spousal is 300,000.
Right.
So there are and there are many. Let's say you're a licensed broker and you don't make that. Licensed brokers can be considered with the right licensing to be an accredited investor. So there you can have an entity. Now, could you have a pool of investors that are non-accredited? The only challenge with that, you better put in $5 million in order to pass the rule. So otherwise, each of the investors would need to be qualified. So
something I really like about crowdfunding is the cross-pollination aspect of it, because you're reaching to the masses whenever you're, soliciting to a crowd. So that's marketing and advertising. Your business, if it's products, if it's services, whatever, it's branding, and, they could just start buying, right off. If it's an e-com site, they can start buying your products or invest, So
Correct.
While you're raising capital, you're also building your brand and getting a lot of exposure. So that's one thing that really turned me on as, an original data-driven marketing and advertising guy. I was just like, oh, cool, this makes sense, because not only can I help these people raise capital, but they're going to be a client after that, because, we're also selling their products or services and getting them, customers. So
correct.
That's an interesting part that I always liked about Reg CF.
Well, so let me finish off something on accredited investor that's really important for everybody listening in. People are misguided by this sometimes, is that under other regulations, when you bring in an accredited investor, you have to get them verified by a third party. Reg CF says self-attestation.
Yeah, exactly.
So
it's like, okay. I'm accredited.
Think about what I just said there. So now coming back to what you were saying regarding the affinity to customers and getting them to participate, regulators gave another gift under Reg CF. I can incentivize you. I have seen just about every incentive you could imagine. I mean, I've had clients who give away beer.
Yeah, perks. Like they're called really references perks in Reg CF on the
Correct.
platform. So it's like, hey, invest this much, we'll give you some swag, a T-shirt, whatever. Like invest this much, and it just they tier it up and scale it up so that
the investor can invest more,
which is totally compliant,
fully compliant. Thank you. And I've seen some company give away a truck, electric truck. I mean. And I've seen people put $250,000 on their credit cards so they can get that truck. So it just goes to show you that it has so many different ways for a company to benefit and use it compliantly. And you go, I don't have any products. Well, the incentive could be additional shares. I mean, so again, structuring your deal is really important. So Reg CF, I call it the regulation that keeps on giving because, once you're done with that, you can do another thing. You can reapply and do another $5 million the following year. But if you need more capital in that same year, there's another regulation, and you brought it up, Regulation A+. So Regulation A+ is an old regulation that's been around for a long time. It is a regulation that was revamped by Sarah Hanks and Sam Gusick. And what it's done is just been transformative. So any company that needed more than $5 million, you can now, again, reach the general public, right? But now you can raise up to $75 million. You can incentivize the investor.
It used to be $50 million, and now
right.
$75 million.
Now
like some of our most successful raises on behalf of our clients were Reg A+.
They're beautiful.
So explain why.
Well, I get excited about Reg A because it's one of those regulations. Being a Canadian, when you got nothing, you really appreciate the logic and you appreciate what it gives a company. So not only can you raise $75 million, okay, so that's one. It's a free trading security for the investor. There's no holes. They can go to a Starbucks or a Tim Hortons and go out and sell it, or Dunkin' Donuts, and sell it to the next person, no problem. They can sell it online. They can advertise. They're in full control. They can incentivize the investor, okay, but I'm not done yet. So the regulators also recognize another thing. By the time you're using Reg A, you're either a company that's done a capital raise before, or you've got investors. So they have an allowance up to 30% of the raise, 30%.
Now, is that typical or required that you have raised capital before?
No, it's not required. But if you have it, look, every company. It's momentum. You needed it. You got to this point.
Street cred.
Right? But they're getting antsy. Look, I've met tech clients. They've been with their companies for 10, 15 years. Some of them are not looking to exit completely, but they want some of that money back, right? So Reg A wanted to bring the other part of the Jobs Act, bringing ownership back to the owners. And nobody's ever, I'll get to why the Jobs Act was created, but this is one of the other attributes, bringing back the ownership to an owner. So what does that mean? It allows me to raise up to $75 million and make a request to the SEC that 30% of it, which is 22 point something million dollars, to be used to allow my current shareholders to exit. So my new shareholders are coming in. So I'm going to give everybody kind of a way of looking at it. My current shareholders came in at $1. My company's been growing. Things are going well. My new offering is at $5 a share. So as I'm raising my capital and I met some of the thresholds that Reg A allows, I can now give an opportunity for my existing shareholders to sell and get their money back.
And that's the most important thing is, you have to, be very, very, very clear with the investment offering to a certain pool of investors. If it's a Reg CF and then you want to do a different offering structure, like they cannot conflict with the other.
No.
You cannot dilute. You cannot screw over, this pool of investors by, like playing favorites. It has to be compliant. But you can run two separate offering structures at the same time,
Yes.
as long as they're not conflicting, correct?
Correct. You can run 3.
Oh, my man.
Only in
Like-
America, you can do a Reg CF, a Reg A, and a Reg D 506C all simultaneously. We have clients that are starting Reg CF, and immediately they hit the 5, they can start their Reg A.
I mean, in my opinion, if you're doing a Reg CF, go ahead and get the paperwork started for a Reg A Plus or a Reg D. So we've covered Reg CF.
Correct.
We've covered Reg A Plus.
Yes.
What is a Reg D?
So Reg D is the accredited investor exemption. So what separates the two exemptions totally? One, Reg CF 5 million is the limit. Reg A 75 million. But I should also mention you can have unlimited shareholders. So keep that in the back of your mind. Unlimited shareholder. Now we move into the Reg D 506C world. I can raise unlimited capital, but you could only have
max cap,
2,000 shareholders. And why is this important? Because the other big buzz, tokenization, right? Everybody wants to tokenize everything, and I go, this is great. I love it. We knew the Jobs Act. If we were ever going to have tokenization, it had to be the Jobs Act. And people go, no, Oscar, we're gonna go tokenize these Reg D offerings. And I go, great. So you're going to spend $250,000 to tokenize something that only a maximum you can have is 2,000 shareholders. And I'm not even done yet. You still have to make sure they're accredited. You got Rule 144 restrictions.
So let's not assume everybody understands like tokenization of data. So explain what you mean by tokenization.
So during the emergence of the Jobs Act, right behind it, there was another spark plug occurring, and that is where blockchain emerged. And obviously, most people got all excited with crypto or some form of digital asset as the most.
And some people got really disappointed about crypto along the way.
I never participated. I'm from Toronto, Ontario. I was there at the birth of Ethereum. In fact, I remember going to some of the events, and I like the concept. I love the whole.
I love the blockchain.
I do. I'm all in for blockchain. I'm all in. But the part, again, my topic is private capital markets under the financial services, a fully regulated scheme. Dr. Craig Miller, our chief scientist and technology officer, we wrote a paper that said that if we were going to have blockchain technology use for the private capital markets, it needs to be in a permission-based environment, which was totally different than what everybody else was saying. So tokenization is just one of the elements of blockchain that you can issue a digital token ownership representation of what you own, right? So instead of carrying a paper, right, the days of you invest, $100,000 in a company, you get a paper certificate and you put it in your vault. Now you have a digital representation, immutability. In fact, I would say this is one of the great things about blockchain, which is better than paper. It's immutable. You own that. This is you.
Right.
That's it. Nobody can ever erase you. Like what Facebook tried to do, what Mark did to his co-founder, you could never, ever
Right.
do on blockchain.
Yeah.
Right?
Exactly. That's a full-on fingerprint. Yeah. No. So that's interesting. So you did mention, and I don't want to skip over it, that you wanted to go back to why the Jobs Act came to fruition.
So David Wheels, so he is the former vice chairman of NASDAQ. So I lived in Canada and you live in the United States. So I don't know if you went through this, but in 2008, you know what happened, right? The financial collapse of the United States. If it wasn't a wake-up call for everyone, it certainly was for David. What he saw that day and the days and weeks and years following is that something was changing in the capital markets. So people keep thinking that public companies are innovative. They're creating jobs. They're neither. They buy innovation, and all they do is lay people off.
Yep.
Okay, other than a few tech companies. Why? Because they need to meet their quarterly targets. Have you ever noticed something really interesting about a report? Yes, company ABC is going to lay off 22% of their staff. They already know the percentage. I mean, how do you know the percentage exactly? Well, because that's what you need in order to meet your quarterly target.
Sure.
They're giving a signal to the industry saying, yeah, don't worry, we're going to hit our target by reducing the overhead. And they're going to the math. Yeah, 22% is the number we needed. Slash it away. So that's not going to make America great again.
No.
Okay. So David knew that if we didn't go back to rebuilding private companies, and the other part of 2008 is that the financial collapse woke everybody up. At least I hope it did.
Yeah.
The only people that walked out with cash were the brokers, right? The investment bankers. They got a bonus after all that. The federal government bailed them out, and they used that money, and nobody cried foul. A couple were writing on the wall, and that was it. They were able to buy their new homes, cars, while everybody else had to rebuild. So the Jobs Act was democratizing by changing the landscape, who can participate, how to create, and keep the ownership to companies.
Exactly.
Okay.
Which is huge.
Which is huge, right? But the other part with David and myself and all of us David is still continuing with the Jobs Act, by the way. He is not stopping. Minorities. Black communities in the United States are so far behind. There are some great leaders, don't get me wrong. There's some great, but if you look at the number of startups, in different cultures, they are so far behind from how to create these. So how to get the education. Could you raise capital legally, compliantly? So his mission is to help Latinos, Blacks, Hispanics, women.
Yeah, no, we have databases of female veteran-owned businesses, and that's minority-based business owners, because there's a ton of just government funding options available. So let's shift gears a little bit. I want to talk about Kore itself, Kore as a company. Why did you create Kore? What does it do specifically for its clients? And we'll get into it, but your quarterback model, but Kore, just elevator pitch.
Kore. So our mission is really to help our clients be more efficient and be compliant so they can service their clients. So what does that tell you? We're an infrastructure company. We are providing the pipes, the rails, the electricity that everybody needs in order to comply. So when I met David and going, it's been a long time. Him and I chuckle about this. I came from the public market, so I got to see something that I got disgusted with. That's why when meeting David, it's by chance, but at the same time, I wasn't happy with what I was seeing. And the financial collapse, I saw it firsthand. So, but what I did know, watching the public markets, how it operated. It was pretty efficient, right? Mm-hmm. You and I right now, we can pick up our mobile device and look at any stock you could use in whatever app, and both of us have real-time data. That's bloody powerful, right?
Real-time tickers, you can see exactly what's going on. Those just the key performance indicators. It doesn't matter if it's measuring your money or if it's marketing and advertising campaign response. It's people want that real-time
the real-time information,
exactly,
right?
Exactly.
But it didn't matter whether I was using the Apple stock app or the one that you downloaded or that you paid for. But it wasn't just the stock information. It was all the company information, the news releases, the reports, everything. You and I had the same data regardless. And people often made the mistake thinking that the internet did that. The internet is a delivery vehicle. That was already there prior to that.
Yeah.
So 55 years ago, a Canadian company built that technology that these 100,000 publicly traded companies sit on, and they build an infrastructure. So when we came in, myself and my co-founder, Jason Futko, we looked at the private capital markets with Dr. Crane Getty-Mellon, and we were looking at it and saying, okay, everybody's going to be coming in, building platform, the Start Engine, the Republics, and there were, in the early days, there were not just 92. There were thousands, thousands. And those were the ones that were going to operate. There were at least 400 vendors standing by to do it. So we go, that's not what we want to do. They're just going to build little islands.
Right.
So we were, in our minds, knowing that what they were going to do was important, but it wasn't going to solve the problem. We were just going to all we were going to do is make the problem worse.
It was it was like a little bit of Wild West in the beginning. And you guys, from like what I've seen, part of why I'm very excited to be working with you guys is, I mean, you're very organized, you're very attention to detail. The infrastructure is truly there. You've done it how many times for how many clients? Like, so that in itself, I mean, the Kore name is extremely well known in the private equity space.
We're the oldest. We're the oldest one in this new industry.
Yeah. So you guys educate your clients, yes. And like that's one thing in my experience. Having stumbled into the capital raise game as a data provider, data being the fuel, and then driving that through a vehicle to an offering page where it's compliant for an investor to actually invest. Like what I've learned is like a lot of times somebody will just call me for marketing and advertising, and they're a perfect prospect because I know they don't have money and they need to raise capital. They've got a great concept. I'm like, why don't you think about doing like a crowdfunding campaign? Or, there's different regulations, offering structures to where you can raise a certain amount, but it sounds like you just need some money. And they're like, yeah, that sounds great. And, I'll tell them about the programs that we do for that, but they're not ready for me yet because they don't have a corporate attorney. They don't have a securities attorney. They don't, have anybody that, is a finance person to help them choose the right offering structure and put together, just the whole pitch, all the materials, the videos that need to promote it on the offering page. So like in that particular case, early on, I was just like, okay, here's one of my local corporate attorney buddies. You can talk to him. He can help you with that side. And then like maybe 3-6 months later, I'll hear back from the client like, hey, oh man, that was a pain, but I'm ready for you now. But like with Kore, I can direct them to you guys. And you guys are just like this information highway, just like, all right, cool, you need this, go there, this to go there, right? I mean, is that...
That's in essence what the infrastructure does. I mean, when we were looking at it is, I knew that one of the biggest problems in this dark area. So keep in mind, we're back to that 1.5 and the rest of us, we're dark. And that dark, shady world, you can imagine all the things that have been going on over the years.
Sure.
So we look at it this way. The start to finish, going back 6 years ago, was almost a year for companies. Finding the lawyer, finding the auditor. You had to go to the lawyer. Have you done this before? No, I haven't, but I'm interested. The auditor, what kind of race is that? I'd never heard of that. That's illegal. And I'll get to that. I mean, I've had people, lawyers and auditors who say, even to this day, that what I've been telling their clients to do is illegal. But once they find out it's not, they're like, oh my God.
I know, right?
It's a wake-up call, right?
It's an epiphany.
So education is critical. But so what we learned is that there are so many intermediaries, wrong intermediaries, that were getting in the way of, let's call it the relationship. I have a relationship, but that's going to cost you. So we removed all that. So we created an infrastructure where a company can start in their capital raising, not in months, not in days and hours. You sign up, boom. You're immediately already connected to a lawyer, to an auditor, to a FINRA broker-dealer, to a marketing firm, to Innovate, to everything.
Are you guys hearing that? Like, that is what Kore brings to the table with the majority experience in this space. So like, if you want to raise private equity and you want to do it right, then Kore is your go-to company to get that done fast. And trust me, you want to do it that way because if you don't, you're going to regret it. It's like, a lengthy process of puzzle piecing. I've seen people go through. It's really painful. So that's why I'm very excited to be working with Kore on behalf of my clients. They get them ready so that I can drive the traffic to the offering pages. So.
That's an interesting word you use because I think this is the challenge everyone has. And I'm one of those people. I'm very analytical. I go into a situation and I won't leave it until I fully understand it. And so I'll give you an example. Some of the new features within the infrastructure are to solve some real problems. And you mentioned your buddy there, 3-6 months with a lawyer, right? So I'm going to give you a typical Reg A before the company goes live, and with a lawyer, an auditor, a quarterback, and a broker-dealer. They will exchange...
How many emails?
Just under 5,000.
Yes. Painful.
Okay, and that's
awful.
not the worst part. 30% of those emails are duplicates. Oh, did you send me that email? Oh yeah, it was before. Okay, I'll resend it to you again. So again, that's why I said when we came into the market, we saw all these players popping up. So all we did was just we highlighted the issue. We have fragmented systems. Everybody's building something on their own. I want to build my own island because I want to build my brand. Great, that's fantastic. But then it causes friction for your buddy, the company. And then it causes friction for the investor. And we're going to get to those two big pieces of the equation. But friction, friction, friction. And people go, but Oscar, I can raise money. Yes, but friction, you haven't figured it out yet. Raising the money is just part one. Part two is managing all of that. And likely is you will need more money and you're going to go through this again. You can't keep adding costs to it. The whole idea of the Jobs Act was to reduce the cost. Your first one might be a little cost, but the idea is to reduce it. So it's important that companies like yours are not involved in the part of the raise until your time comes.
Exactly.
Right? You shouldn't be there when they're just getting set up with their lawyers. You should be set up when the lawyer's engaged, the broker-dealer's there, and you go, yeah, you're ready to go.
Yeah, plus, I mean, like, I'm not a licensed FINRA broker-dealer. I have no business. I'm not a securities attorney. I have no business advising people on what to do. I'm like, nope, you need to go talk to somebody that's, allowed to do that, and then you can come back to me.
Exactly.
So, like, I love that you guys have that infrastructure all in a box with a bow on top,
Turnkey, compliant, and keeping everything. And we gave a bigger bonus. So when we were setting our goals to building an infrastructure, we saw that the applications that were being built were great. There's cap table management. They're going to need that, right? And we saw tools for investor relations or something like that. Again, another tool out there. And then we would see tools to do the capital raise, another tool over there. So tools and tools and tools. So I'm going to bring everybody back to 1990. So you guys ever heard of a company called Microsoft?
Familiar?
So
Not at all.
Not at all. So prior to Microsoft, one of the biggest companies in the world was WordPerfect. In fact, WordPerfect owned 96% of the global market of word processing. And so what did Bill Gates do that was different than WordPerfect? He said, that's great. So is Lotus. So all that is great. But these all sporadic applications make Nate a living nightmare. He's got to be doing all these things and duplicate. Now we're going to bring Microsoft Office all in one, make Nate's life a lot easier. And look at the dominance that took over. So we did that. We brought in a platform that had all the applications one would need. You need shareholder communication to communicate with your shareholders. You need a portfolio to give your investors the ability to look at their portfolio to see it. You need cap table management to be able to manage your cap table real time.
Everything in one place. It's so important. Like, nobody wants to toggle between 20 different platforms.
No.
It's awful. It's
horrible.
awful. You'll lose your mind.
Yes.
Yeah, so, I love what you guys are doing. I mean, eliminating that friction and inertia. Like, who wants to run barefoot through a bunch of glass whenever you can wear a fresh pair of Nikes,
You'd be surprised how many people. But there, we give it to them even private label. We recognize that they want to do this on their own website with and we encourage that. So we're like Intel, we call it Core Inside. We're just inside there to power you to make sure you can do and manage your company. So that's one part. Now let's get into the issuance side. Issuance is about raising capital.
Right.
Two major frictions here. So number one, you as a company go through all this heavy lifting, getting all this set up, and for whatever reason, you and the broker-dealer or the platform don't work out. Now you got to go to the next one because you're still raising capital, right? And now you got to duplicate it all over again for that guy or that individual or that firm. But I just did it. Yeah, I'm sorry. We're different firms.
Doesn't count.
In our infrastructure, because our infrastructure, we build it on a permission-based blockchain technology that we took to the SEC. We're the only one to date.
And that's huge. So, really drive that home. Explain that. Elaborate on that.
Thank you. So, when we looked at blockchain, when we were talking earlier, when we looked at blockchain, we said, this is transformative. This is going to be the game changer. We knew that this could give portability. People were talking about flipping and trading. All of us were just portability for the company and the investor. So we were fortunate enough to go through the process of submitting an application to the SEC. We were qualified after 3 years. It's a 3 years. That's right, 3 years. We got our qualification under the job. So our chain, we can store, create, issue tokens, NFTs, fully compliant.
That's huge.
Right? So now we build trust. So I can go to a FINRA broker-dealer and show it to them. I don't forget about my verbal.
Now you guys are stamp of approval.
Correct.
It's got the core stamp on it because you're already that 3-year process with.
Well, whoever
SEC.
anybody else can do it, but nobody else has. And those who do, they eventually abandon because if you don't meet the requirement, and what are the requirements? Understand how it works. You still need a FINRA broker-dealer.
And understand how to connect it all so it's easy to keep organized in one single place.
One single place.
I love it.
So that allows us to bring in broker-dealers who can trust the infrastructure. They can verify the data. So coming back to this. So can a broker-dealer accept the work of another? Yes. As long as the information, how it's stored and saved, is something that they can all trust. Boom. Now we got portability for the issuer, which has never been done before. But the big one is the investor. So you said right at the beginning, you said, Oscar, these funding platforms, Republic, Start Engine, WeFunder, Title III, boom, bang, 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 bang. And those are just the Reg CF. You're right. There's another 1,400, 3,000 of them, Fundrise and others, doing the Reg Ds and Reg As. And there's Nate. And Nate goes through all these platforms and wants to keep investing because he's happy and so on. But Nate now has been given this massive burden that every single time he logs into this, each of these companies have another compliance requirement. They need to be managed by an SEC registered transfer agent.
Which is painful.
Very.
I mean, what's the average amount of time it takes to go through that process with a platform? Just to give people who have not invested crowdfunding style before, just give them an idea.
Yeah, so registering a platform, the registration is simple. It's easy. Whether you do it with a broker-dealer website, decentralized, or in a platform, putting in your information a minute or two and you're done, okay? That's the easy part. To make the investment, it's probably another minute, okay, because re-entering your information. But after the race is done, the company and you are not done yet. You now need to be ported somewhere else. So what's going to happen is the company can say, hey, Nate, welcome. I'm going to take you over here, and you need to create another account over there because that's my transfer agent. So Nate is going, So he didn't realize that. Then he goes to another platform, and he makes another investment, and that guy goes, I'm using that over there. And
Nate, it gets messy.
It gets messy.
So yeah, it's painful. So a core, you guys have your core ID, right?
There you go. That's the portability for the investors. So that portability allows them to log in anywhere in our infrastructure using that core ID. But it's not just a login it's not a single sign-on. It's a passport. What's a passport? You take it with you.
It's like TSA pre-check, right? Sort of maybe.
Well, it is on that one part. But the real big part is you're bringing your portfolio with you. So I invested in company ABC. Wherever they log in, the 300 plus locations we have online, they can view their entire portfolio. They can transact wherever they are. We now have the ability to deliver transfer agent services completely through an API. So API just means that they don't need to go to a centralized location to go and get it. It can come to them. And that's how you remove friction. You got to put yourself in the...
Thank you for explaining that, because people drop acronyms, especially us tech guys, so
I know,
basically API just means data over here ends up over here. It's a gateway.
It's a simple way to put it. But over the years, nobody was and platforms go, but Oscar, Nate is happy in my platform. If you think Nate is only investing with you, you're missing the point. Nate isn't. Nate is looking at other opportunities. You just opened up his eyes. You don't have all the offerings. So that's the reason why we need an infrastructure. But 12, 14 years ago, I couldn't even tell anyone that. Nobody could even see it. I remember in Silicon Valley, I was in a panel with VCs, and they criticized me. They go, who in their right mind would ever want 5,000 shareholders on their cap table? right?
Yeah, it'd be awful to manage that
Unless you had obviously the core infrastructure. But I would go, well, that's interesting because whenever you go to a venture capital firm, or I've been to your firm, the first thing you ask is how many customers you have. And they couldn't correlate that they're the customers. They're the same people buying the product. They now get to participate. And that transformation it's starting to clue into people that this is not a bad thing. It's actually really good and healthy. We've seen some remarkable companies utilize it. But when we build this out back then and throughout the years, the challenge has been, at what point do you leak out the next piece? So blockchain, just so you know, we waited. We waited until we told everybody, because you know what happens? You've seen this. Oh, we're going to build this and build this and build that. And people go, nobody ever asked, did you build it?
Yeah, right.
So for us, we had to build it. And then not only that,
I see that a lot in AI right now.
we had a lot
coming
of clients.
soon.
No, we have no coming soon. We can show you. Here's the broker dealers. Here's the platforms. Here's the transfer agent. Here's the banks. Here's the IRA. We got it all end to end. So, but there was one more piece we've been waiting for. One more piece. And this was the piece you need and I need and we all need in the private capital markets. And so when Dr. Karen Garimella and I met, we met like with the same way with David Wheel. It was meant to be.
And who is Dr. Karan?
So he's our chief scientist and chief technology officer.
Awesome guy, by the way. Super cool.
Smart as hell. He's got his PhD in AI. Wrote one of the first books in AI and blockchain. And forever then, I knew that this was the key. So we knew that we want to reach the masses. So what is the masses? 4.7 billion people, 450 million privately held companies. And by the way, here's something people didn't even know. Private companies represent 60% of the global GDP. See how important we are, and people know nothing about us.
Yeah,
nothing about us.
Quite the paradigm shift going on when you look at, the venture capitalist world. We are the new VCs.
We are the new VCs. Thank you. We are.
I mean, I'm going to high five you on that, Aaron. We are the new VCs.
Yeah.
We're changing the whole model.
Yes.
It's been really exciting to watch.
It is.
Yeah.
But now we need to educate the masses, right?
Exactly. So like, and you're kind of doing it with your quarterback model, because you guys are, the infrastructure umbrella.
Correct.
You educate and, you organize and you make it easy for people to get, off the ground and started.
Yes.
But you're also at the same time, really drafting, your quarterbacks, which are just studs in different markets that have a lot of reach. And, those companies, I met you through Matt McCoy, RaiseX.
Yes.
Love that guy, man. Like we were what we call Insta Bros. Just clicked right immediately. And, I just spent a whole week with him out in California. Spoke at the Global Capital Network event out there. He was there, then went down to Newport with his wife, and then up to Agora Hills. So, it was just a great trip. Really bonded, and thankfully he introduced me to you. It's been really exciting. So just explain to us your quarterback model. If somebody else wants to be a quarterback,
yes,
how does that work?
So when we started at the beginning, we had to do all the roles. It's like you're. Like Microsoft, like all the great companies that ever started, they had to do all the roles, the installers. So over the years, we were the quarterbacks. We learned a lot. As I told you, I'm very analytical. I took notes. What questions are being asked? What I knew that we couldn't be everything, and we only wanted to be infrastructure. And so what we did is we created a quarterback role. And what is a quarterback? A quarterback is an individual or an entity that is dedicated in helping companies put them together, get them package ready. Because see, here's the problem everybody has. You have, lawyers have, company wants to, but have nothing ready to go. So it's a waste of time for everybody, right? So the quarterbacks make sure that you got all your legal paperwork ready, because that way, when you engage a lawyer, they're ready to go. Mm-hmm. You want that cost efficiency, you better have everything ready.
Sure.
Bills only go up because you don't have things ready. So the quarterback courts the company, nourishes them, makes sure that they bring all the right partners together for their offering, and they're there to either be full-time advisors in their companies. Some of them even join the board, which they can. But their role that they play is so critical for the success of the private capital markets, because for every 10 companies that know what to do, there's 1,000 that don't.
Sure. No, it makes sense. It's sort of a, viral aspect, why,
Yes.
end user, education versus like, let me train some smart, connected
Yes.
quarterbacks and have them be the captain of their football teams.
Correct.
So like it spreads that way.
It spreads. But there's for us, working with Matt, and we have 6 others, and Steven and a few others, we've also now learned as we handed off that role, we don't want to do, we pass it on to them, is that we've now learned that there's an education layer. So if Matt wants to expand or Steven wants to expand, they want to expand their business, I need to be thinking as an infrastructure, what do I need to give them?
Yeah, as their toolbox.
As their toolbox. And as I told you, over the years, another piece came. And it came a lot earlier than any of us ever anticipated. So when Dr. Craner and I were talking about it in 2016, I remember in Miami, and he goes, Oscar, I don't know AI, but there's a lot of research going on, and we're not ready to release it out of the box, right? The Pandora box. And I said, okay, so 10 years? And he goes, yeah. All right, let's just keep working on it. We'll work on our own language models. And at that time, we were writing heavily. We had a lot of content. So we knew this was the future. But if you put it out too early, you're a quack. You really stepped over it.
Absolutely.
Right?
Yep.
ChatGPT came in, and it was music to our ears. We let the market go, the floodgate of all the opportunists and all that, like any other market, and we waited, and we go, all right, let's put our information, let's get it out there. We knew that there was only one other way to transform this market: education. Yeah. What better tool than AI to become the tool for Matt and his team, right?
It's also, just a very attractive model, because, if you want to, bring the masses to you, put out educational content, because people want to learn, they want to understand. And, once you start teaching them, you're their teacher. And then all of a sudden you're doing business with them. And, it makes sense. That's why, YouTube really blew up. All these how-to videos, it's educational. It's like, just put out some good stuff versus like pitching people all the time, Like, help people,
I think the pitching idea in our space, people often wonder why ads don't work, because the company knows they need to raise capital. You need to pitch that to them. You need to help them. So when we launched KoreGPT, it wasn't about us, but that was the base engine. That base engine never existed in ChatGPT. That we knew that. We tested it. They didn't have any of the data. So we launched KoreGPT. And what we're able to give Matt, so give you an example with Matt. Matt can now have Ask Matt at RaiseX. So what does it do for him? 90% of the conversation between him or a prospect or a company is, they know they want to raise money, but they do not know all the intricacies, and a person can spend hours and hours going over it.
So it's like a chat room environment, or it's like a community?
It's a control environment that they have. So we're going to give all our partners their own version, but it's a ChatGPT specifically to Reg A, Reg CF, and Reg D 506C. It's to, Oscar, I have a very unique company. You've seen that, right? And they are. Every company's unique, And look, we didn't even go into the Reg A marketplaces, but there's an example where I really want to do something different with Reg A. I like it. I want to do this LLC series model. Boom. I mean, the thing explodes. It tells you everything you need, what you need to, what are the structures. So the idea is, we want you to get educated as quickly as possible. Mm-hmm. That way, when you meet with Matt or you meet with anyone else, so there's that. And now for the investor, terminologies. What's a safe? What's a crowd safe? I mean, that was one of the platforms called the crowd safe. What was the difference? I remember in the early days, people were getting there. So where's my shares? I'm sorry, these aren't shares. So we were the transfer agent, so we owned the company. So we got a glimpse on how investors were reacting to this security. So a lot of the investors in the early days had no idea what they were getting.
Mm-hmm.
I'll never.
Is it pre or post? Like, you know, yeah.
They
Sure.
didn't know what valuation meant.
Mm-hmm.
They had no idea what a warrant. I'll never forget an individual sending us email. Look, I own these 1,000 warrants, and you got there that I have to pay you for that. No, sir, you do not need to pay us. If you want, you can buy them. But I already invested in the company. Why? So we send a note to the company. You need to educate everybody on warrants.
Mm-hmm.
You need to explain to them what they got. They're getting confused between what they invested in. Because, you bought them
exactly.
at $1.
I mean, it's a lot. And, especially if you're not a seasoned investor.
Exactly. They're new, right?
Yeah, you gotta not only educate the issuer that's seeking capital, you also have to educate the investors. And you got to make that so seamless so that it's just so easy a caveman could do it. Point, click, and ship, Staples easy button, so it's not just an awful process. Well, it should be an exciting process,
Exactly.
So, I love that's what you guys are doing over at Core. It's awesome. So, if people want to get involved with Core, we'll certainly drop your link in the description of the video.
Appreciate that.
And any other links you want us to include. But yeah, guys, if you want to learn about this space on a fast track pace, then Core's the way to go. And Oscar, it's such a pleasure having you here, man. You're a wealth of information.
Thanks, Nate. I appreciate it. And as you said, look, anybody out there who's already in the space providing these services and you want a great infrastructure partner so you can elevate your business, whether you're a quarterback, you may call yourself a consultant. We call them quarterbacks, of course, for regulatory reasons. But as well, if you're a FINRA broker-dealer and you want to tap into this market, one thing I didn't tell you yet, Nate, and I'll tell everybody here, we'll close it off, is that when President Obama signed it in April the 5th, 2012, our participation was zero. Okay, so zero. How big was the private capital markets? At that time was $3 trillion. Okay, today that market is worth $4.5 trillion, and we already penetrated $150 billion of that in less than 6 years.
That's insane.
It is, isn't it?
That's impressive.
That's what we've all done together. And at the current growth scale, we're going to hit that $1 trillion mark in the next few years because we have now changing the behavior of investors. People like investing online. They like being connected to investors. As you said, a video says it 1,000 words, right?
Exactly.
Now you need verified data, which the infrastructure provides you. You got verified participants, quarterbacks guiding it. We're in for a ride of our lifetime.
Yeah. So, quarterbacks, basically, they'd be referenced as somebody that has been sort of a consultant for putting these things together for people that are startups that need to raise capital. They kind of help them organize that. You guys just make that 10 times easier, and that's what you call your quarterbacks. The consultant types that want to be a quarterback should definitely reach out to Core, and also licensed FINRA broker dealers.
Correct.
I love it.
Thank you.
Oscar, it's such a pleasure having you here, man.
Likewise.
Thank you for traveling to Orlando, and we hope to see you back here on the show, very soon.
Thank you.